So today was another poor day for Tesla stock. Now, for all Tesla stock investors, you have some questions in which I think is very logical. When does the selling stop in Tesla? Is now a good time to buy Tesla? Should you sell? Should you hold? All of those logical questions, in which I think the answer is a little bit more complicated than you might think. We do have a lot of things that are going on under the surface. This weekend is going to be important. Very, very important. And I want to highlight the degree of importance this weekend has with you here in this video. Give you guys my price levels to be buying. I want to look at some of the option activity where some hedge funds and institutions are targeting Tesla stock to go to. This can give you a little bit of an insight because options are more of a leveraged bet than just buying shares outright. And I'm excited to bring you guys that information, but I also want to discuss what's happening in the markets today. You are getting a fear move, or at least you did see a fear move, and that's not so great. It's not exactly what you want to see. Hit the like button, subscribe to the channel. If you own Tesla stock, consider sharing this video to someone that needs to hear this information. I know in this community, the broad market is not really covered too much. What's going on out there besides Tesla is just under coveraged in this community. And I think that's something you cannot ignore, especially over the next, call it 2 or 3 weeks. So let's get into it. Comment down below. Let me know what you think about all of this information. And just to give myself a quick shout out, if you guys would like to come trade with us live in real time, link down below in the description of this video. That is the only paid sponsor of this video. I refuse to take a paid sponsorship because most of those products I wouldn't personally use. So I'm not going to promote something I wouldn't use. But the trading community, I would for sure be involved in that. So I want to start with the broad markets because I understand it. Tesla just had earnings. Tesla stock just got beaten down. You were down yesterday about 9.3%. Today you're down over 3%. It's not a great last 2 days for Tesla, or at least it hasn't been a great last 2 days for Tesla. But what is really to come? Now, people forget this. The broad market matters. How the flow of money is moving matters. Where people are investing their money can tell you a lot about the markets and where we are. And I think, again, that's something that is really not highlighted. Let's start with TLT. The bonds are usually seen as the #1 asset for risky periods of time. There's really nothing better to own for a risk-free return to park your money during volatile or uncertain times in the markets. If you pull up a weekly chart of TLT, any major events you have seen, whether it be '08, what people bought the bonds, right? Bonds went from 60 to 90. People bought the bonds. During the fears of the double dip recession in 2011, 2012, people bought the bonds. 2014, I believe that was Brexit crisis. People bought the bonds, right? Same thing back here, 2019, 2018. People bought the bonds. And really leading into COVID, you can see this pretty clear as well. People bought the bonds pretty aggressively. It was short term. People were very fearful, right? People got over that fear pretty quickly. So it was just a couple of weeks, like three solid weeks, 4 solid weeks of gains in the bonds. But that's the point. People buy the bonds when there is fear. Lately, you have not seen that on a weekly chart. So we haven't seen a sustained just inflow into bonds. A lot of that has to do with Fed policy and the hawkish verbiage we have gotten from the Fed. Even Powell yesterday, he said, I don't know where policy rates are going to end. We might not be restrictive. We might have to raise rates again. All of that leads to uncertainty around yields going higher. And to make matters worse, the Fed is no longer buying bonds anymore. So that means the markets are basically up to interpretation where they feel the yield should be. And I think it's pretty safe to say the government was a lot safer 15, 20 years ago than it is today. And why I say 15, 20 years ago, that's really when the Fed started QE, quantitative easing, was 15, 20 years ago. They started buying bonds in some capacity or another. And the state of the government's balance sheet has really deteriorated since then. So the higher the risk, the higher the yield. It's as simple as that. A 10% dividend stock does not pay you 10% because they want to be generous. No. They probably paid 5% or 4% or 3% at one point, and then investors just didn't want that yield. They said that was not high enough of a yield. You're way too risky. So they sold the stock, and now the yield's at 10%, for an example. Where's the government's risk-adjusted yield at? Who knows? Is it 5%? Who knows? Is it 7, 10%? Who knows? That makes it a little bit more difficult. But regardless, when people are fearful, money will flow into bonds. And you have seen that a little bit recently. Today, TLT was up about 0.5%. So there was money flowing into bonds today. You haven't seen this continuation of money flowing into bonds, meaning that yields will actually fall as investors are fearful. You've seen that a little bit today, but you have not seen that over the prior 2 weeks or so. It's been a net, loser on the bonds, right? Yields have been going higher recently. Now, if you look at USO for Middle East conflicts tends to be another safety asset, because if things get bad, it's highly unlikely the price of oil would go down. Usually the price of oil is going to go up if there's a conflict in the Middle East. So you have definitely seen since the start of this conflict on October 7th, the first trading day was October 9th, you've definitely seen the price of oil increase from about 76, 75 on USO to where we are now at about 81.5. So you have seen a risk off kind of fear move in oil. The dollar, same thing there. You have just recently seen a big rise in the dollar. That's not great. GLD, though, that's really the one that is captivating, okay? Because gold doesn't always react as a safe haven. Like during 2020, you didn't see that safe haven aspect of gold all too much. Gold actually fell alongside the markets. But it seems like investors, if they don't want to buy the bonds right now in massive amounts, massive quantities, so they're buying gold. Gold has really been outperforming everything recently. Since the start of this conflict, gold has went from about $170 on GLD to $185. This is probably the number one thing that I can sit here and say is really bad news for our markets. If this conflict does get worse, you're going to see more money flowing out of stocks and into gold, into oil, and hopefully the bonds, because that would make yields go down. And if you look at the NASDAQ, you're really not in a good position right now. Longer term, you do have a cup and handle formation. But if you break under this lower end bound, the markets are going to fall big time. The markets likely come down to that 200-day moving average. Now, we do have a couple other risks out there, right? You have big tech earnings that are coming here pretty soon. You have the next Fed meeting on November 1st. You're going to have more economic data coming out next week. And then again, add on top of that, this Israeli war. You could be in for quite the predicament here over the next 2-3 weeks or so. The risk to return, the risk to reward just doesn't make a whole lot of sense here. And that's unfortunate that Tesla fell so much after earnings, because I just don't have that many good things to say about our markets right now. Especially the higher bonds go, the higher yields go. At 5%, why would you own stocks? Even your dividend stocks that pay you 2 to 5%. They're destroyed this year. That's not a safe or good investment. Buying Tesla after it just dropped, almost 15% after earnings. That's not exactly the best place you want to park your money. And this is from the perspective of institutional investors. Institutional investors, hedge funds, market makers, those are the guys that really drive the markets. Collectively, if retail gets involved with a certain stock, sure, they can move that stock. But on the bigger picture here, retail's really not a factor in driving the market higher or lower, for the most part. So you're in a very precarious situation. If this Israeli conflict does get worse, you could easily see markets fall, I hate to say this, to your October 2022 lows, or even fall more than that. Because why? Well, I'm sure at that point oil goes crazy, and probably to an extent that we wouldn't want to see. You could see gas at $10, $15, $20 a gallon if the Strait of Hormuz did get cut off by Saudi Arabia and Iran. That would probably be the first thing that happens if Israel actually does invade Gaza. They're going to want to punish the West. They're going to want to punish, the U.S. That's the way to do it. Financially, you could cripple the U.S. by just cutting off that flow of oil. I mean, Saudi Arabia, Iran, they don't consume nearly as much oil as they produce. So they would still be able to sell their oil to other places, but for much higher prices. Okay. It's not exactly a good situation to be in for us, for our markets. And then the obvious that comes with a regional war, the possible escalation, the possible, outcome of this turning into a much larger conflict. That's always going to be a fear event. After the Yom Kippur War in 1973, which only lasted like 20 days with Israel and all of the other countries in that area, Egypt mostly, Lebanon, all of those, Jordan. Well, that war only lasted like 20 days, but markets ended up falling about 20% off of that. This, I think, could be even worse, again, due to the implications of oil. It would make inflation go higher. It would definitely hurt economic activity. So Tesla was in a pretty bullish technical position. On the charts, before earnings, you had been riding this uptrending line, basically making higher lows. And when you connected that line, it looked good, right? Even the day before earnings, you bounced right off of this line. This dates back to January 2023, the lows that Tesla had hit. Well, on the opposite side, you had seen a longer-term downtrending line of resistance in here. And what happened? You were coming to a head where if you broke out to the upside, that breakout could have been massive. If you broke down to the downside, that breakdown would be massive. And you have seen that so far. It looks like Tesla found support and bounced off the 200-day moving average. I said this very clearly right after we had earnings. Tesla was at minimum going to fall to its 200-day moving average. That was at the bare minimum. In the more, bad outcome, Tesla stock could easily fall to the 180s. That would be pretty easy. Now, I don't think Tesla falls there by itself. I think Tesla gets stopped out at the 200-day moving average as long as the markets don't deteriorate and get worse. So if nothing else happens over this weekend, if there's no Israel, conflict that continues to get worse, if there's nothing that is really bad, you're probably done with the selling here. If it gets worse, then 180 is almost a certainty. If it turns into a really bad event, and let's say the broader markets get a 10% pullback from here, then you probably fall into that 150. Now, if the markets fall 20, 30, 40%, you could even fall lower than that. You could see Tesla at 130 easily at that point. Now, if you're a long-term investor, that's great news for you because you can buy more Tesla stock. Pretty simple. It just, if you were able to buy shares at 130 and you just got back to 160 where you were before earnings, I mean, that would be a 100% return. Who would argue with that? If you're a long-term investor, you're going to love this video. If you're a short-term thinker, if you're a short-term investor, you're probably not going to like this video all too much. Okay, let's just be honest there. So let me know down below in the comment section. Do you think this Israel conflict is going to get worse or not? I think that is really the only thing at this point that is going to negatively affect the markets. Obviously, if the economy deteriorates, if inflation does soar again, these are obvious concerns as well. If earnings come in really bad, that's obviously not going to be great as well. But do those things look more likely than not? No. I would say there's probably a 30% chance earnings just come in terrible, maybe a 25% chance earnings are terrible, and people are really fearful off of that. I would say there's probably a 25-30% chance that the economy just deteriorates into the end of the year, into the beginning of 2024. They're not very likely outcomes. They're not over 50%. No way. No way are they over 50%, probabilities. So the thing that has the highest probability is this Israel situation, in which that's probably a 60 to 80% chance, I would imagine, just throwing numbers out there, that this conflict gets worse and causes more downside for our markets. So in terms of actually buying Tesla stock here, I think these prices are beautiful prices. I did some buying today. Not going to lie to you guys. But do I think Tesla could fall more? Of course. Of course. And again, 180 could be pretty likely if you do just get more weakness in the markets. Maybe earnings are okay, but they're not great. Stocks sell off. Pretty typical market stuff. 180 is kind of likely at this point, or at least not too far out the realms of, unrealistic. Now, 150, I think you only get there if you're seeing real pain in the markets. And then 130, I think you only get there if you're seeing like a 15-20% pullback in the broader markets. Now, if you had, $1,000, $5,000, $10,000, however much you want to buy in Tesla stock, the best way that I always like to tell people, to get into positions, and this is not a recommendation, it's not financial advice, anything can happen in the markets. Who knows? Tesla could fall to $50. Who knows? Anything can happen, okay? But it's always scaling in. So right now, I'm deploying about 20-25% of the capital that I want to allocate to Tesla right here at these prices. So I am buying at these prices. If Tesla hits 180, then I'm going to deploy another 25%. Then I'm going to be 50% in at that point of my deployable capital that I want to put in Tesla. If Tesla falls to 150, I'm going to put another 25% in. And then if Tesla falls to 130, I'm going to put the rest of the 25% in, and I'm going to sell a kidney to buy as many shares as possible. That's the way that I'm looking for trading this. Now, if you look at technical indicators like an RSI, Tesla usually bounces right at about 30. Almost every time. Like going back multiple years here. Almost every single time. And you're pretty much right there. You're actually a little bit under 30. You're at 28.32. So I would imagine you do get a bounce here in some form or another. The only time in recent history, dating back to like 2020, that you did not bounce at that 30 level on the RSI was really over here in December, early January of 2023. And that was because Elon was just selling a lot of stock. It was artificially low at that point, and there was just a lot of fear around Tesla. Into the new year, Elon selling stock, buying Twitter, not focused on Tesla. You guys remember what was going on at that point, right? Well, now you're back there again. So I think if you are a savvy trader here, you are someone that does want to, trade this situation, buying a bullish position right now makes some sense over the next couple of trading days, as long as this Israel conflict does not get worse. And that's what's so hard about this. If it does get worse, I mean, you definitely don't want to have that bullish positioning, because everything's gonna fall, essentially. Now, the next major option expiration for the markets and for Tesla stock is November 17th. So let's take a look at some of this activity here today, really how people positioned their portfolios in Tesla. So what we're seeing, it's actually quite mixed here. If you take a look at the volume, 48.24% were calls, 51.76% are put. So if you go off of that, you're a little bit more bearish than bullish, but it's not a huge skew in either direction, right? It's not super bullish, it's not super bearish. If you take a look at the open interest, things look really neutral here. 49.32% call open interest, 50.68% put open interest. If you look at the individual strikes and the contracts, people were actually buying positions at. So the $200 put has 24,000 for open interest and seen volume today of about 7,200. That's really not too crazy. The 210 put has open interest of 12,000 and you've seen volume of 7,000. The 215 put has open interest of about 12,000 and volume of 4,000. The 220 put has open interest of 13,000 and volume of about 5,000 today. The call activity is in the couple of thousand range for the 230, 225, 220, 215, 235. All of these seeing about 3,000 for volume apiece, with in between 4,000 and 5,000 for open interest. So nothing too crazy there as well. Some of these are seeing a little bit more activity, which is very interesting. The $300 call has open interest of 18,000. The 290 call has open interest of 13,000. The 270 call has open interest of 9,000. But the volume on these are really, really light. So 2,500 for volume at the $300 call, 1,400 for volume at the 290 call. At the 270 call, about 3,000 for volume. 240 call has 12,000 for open interest and 2,600 for volume today. It looks like the puts are winning out here. It looks like you are seeing more activity on the put side than on the call side. More positioning for the puts rather than the calls, especially, again, that $200 put, that 210 put, even the 180 put, seen volume today of about 4,000 versus the open interest of 6,000, but it's not overwhelming position. Like I always say all the time, if you really want to see a direction, you want to look to see if there's more volume than open interest. If there's more volume than open interest by like 2 or 3 times on any given day, there's a lot of positioning for, that direction, whether it's puts or whether it's calls. You're really not seeing that as of right now. December 15th, that looks pretty light. If you look at January of 2024, you are all over the place here, seeing some decent activity at the $300 call, about 6,800 for volume today, and the 200 put seeing about 9,000 for volume today. So basically what I'm looking at here, nobody really knows what's coming next for Tesla, but the puts are unfortunately winning out. That's just the bottom line to it. There is activity on the call side, but if I were to choose a forward-looking kind of position on Tesla, it's the puts that are winning here. Maybe a little bit of good news in this Israel conflict. 2 American nationals, a mother and her daughter, who have been released by Hamas, have reportedly been turned over to the Red Cross, where they will soon be transported to Egypt from the Gaza Strip before their trip back to Israel. So you have seen 2 hostages getting released. This is probably good news. Although what really matters here is, do other nations get involved? That's what you want to be watching for over this weekend. If that escalation does happen, then the markets, unfortunately, are not going higher. But if the markets do go higher, I would expect Tesla to see quite the bounce back here. And probably just over the next couple of days, you will trade sideways, if not move a little bit higher. But in the medium term, the next couple of weeks, it really depends on this conflict, the rest of big tech earnings, the data that comes out, as well as the Fed. But I think by far the biggest thing that's going to potentially give us more downside is this Israel conflict. And maybe a simpler way you can think about this, if you don't really understand what I said about oil, you don't really understand some of these other safety assets, think about it like this. When investors are buying gold, when investors start buying bonds, when investors buy oil or the US dollar, it is pulling money out of stocks into those assets. So it is leaving the stock market and heading into these other assets. But really the hard truth for some of your bears to, digest with Tesla fundamentally couldn't be in a better position for the long term. A lot of people did not point this out, but I will not be one of them. Tesla increased their cash position by $3 billion in the latest quarter with almost no debt. Okay, if the situation does get bad in the economy, Tesla might be the only survivor out of auto companies. It's going to, for sure, be in the best position possible following the latest quarter, even though their numbers were not too great and Elon kind of didn't say great things about the Cybertruck, right? It kind of put cold water on the rally with Tesla. The truth is, the economy is probably going to go through some weakness, and Tesla is in the best possible position to deal with that weakness. You're not heading into that in a position of weakness. Tesla's heading into a potentially rocky economy in the best possible position. Let me know what you think about all of this down below in the comment section. Where do you think Tesla is going next? And what do you think is really the next biggest catalyst that is going to push Tesla stock in one direction? Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. If this is your first time here, consider sticking around a while. And if you guys would like to come trade with us live in real time, link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.